In today's video, we're going to discuss why you can't anchor Yieldmax ETFs with SPY or VOO. Yieldmax helps us earn over $300,000 per year in dividends, as you can see below, and our performance value shows that we're beating all of the indexes with Yieldmax, Cornerstone, and Defiance. We're up 22.67, the S&P is up 14, the Nasdaq's up 18, the Dow's up 3, and the Russell is up 1%. So we're beating all the indexes on a year-to-date basis, and on a daily basis, we're at 0.36 on Friday, or $3,700. If you look above, that beat the S&P. The S&P was down 0.41, the Nasdaq was down 0.71, and the Dow was down 0.12. So we're beating all the indexes on a daily basis and on a year-to-date basis using Yieldmax, Cornerstone, and Defiance funds, and they help me live the FIRE lifestyle, which is financially independent, retire early. If you need help doing the same, email me for my e-guides at akintodd48@gmail.com. So the first reason why you can't anchor Yieldmax with VOO or SPY is because SPY and VOO don't pay you qualifying income to live the FIRE lifestyle. So as you know here at this channel, for every $1 you put in your account, you get $4 of purchasing power, and I'm just using a fraction of this margin purchasing power to get ahead. But I don't use too much debt because obviously that's risky. You want to use only the amounts that you can pay back with your dividends. So if I earn $300,000 per year in dividends, I'm paying back my margin debt in less than 1 year. So the margin debt isn't really a problem for me. The leverage goes away in less than 1 year once again. Also, my margin interest isn't a problem because I've negotiated my margin rates down twice. Many of my clients who bought my e-guides did the same thing. So I'm not worried about the margin leverage, I'm not worried about the margin interest, and I'm not worried about this debt showing up on a credit check because margin debt does not show up as bad debt to the banks. In addition to margin debt not showing up to the banks, my dividends do show up and act as qualifying income to level up my account. So this is how I buy a house or a car without a 9 to 5. I use my dividends, which qualify to banks for loans. So they give me my loans to finance a house or a car, but they also give me my loans to level up my account and grow faster, okay? So I don't have to grow with the S&P and the Nasdaq. What if the market has a down year? Well, I can always use these dividends and then qualify for more loans to level up my account that way. So that's the first reason why you can't anchor Yieldmax with VOO or SPY, is because VOO or SPY don't pay enough dividends to qualify you for loans with banks. Even though VOO is 30% maintenance, as you can see below, VOO right here, 30% maintenance, and SPY is also 30% maintenance. If you go look at SPY, you'll see 30% maintenance here as well. Even though VOO and SPY are low maintenance, Cornerstone also has low maintenance at 30%, okay? 30% here, Cornerstone, but it also pays you a 21% dividend every year at its NAV. So right now, Cornerstone's paying you a 16% dividend because the fund has moved up this year. This is what happens with dividends. When the fund moves up, the dividends go down. But every year, Cornerstone sets its dividend at 21%, which is 20 times more than VOO, okay? So once again, VOO has 30% maintenance like Cornerstone, but it only has a 1% dividend. So this is why I put so much in Cornerstone. It not only has low maintenance like VOO or SPY, but it also pays you a 20% dividend as opposed to VOO or SPY's 1% dividend. So if you need help understanding maintenance, that's in my volume 3 e-guide. Maintenance is the secret to living the FIRE lifestyle. We want to keep our available withdrawal high at all times when living the FIRE lifestyle. Even if you don't use margin, you want to be able to withdraw from your account freely. Well, you need to have high available withdrawal to do that. If you're in a bunch of high maintenance names, you can't withdraw freely. So when you have low maintenance, that preserves your equity and gives you high available withdrawal to live the FIRE lifestyle with. Also, Cornerstone is 4 stars. So even though it looks like it goes sideways to down on its chart at E-Trade, as you can see here by the Morningstar chart, it moves upward left to right. Cornerstone was also beating the indexes in my past videos. If you go back to 2023, you can see my past videos where Cornerstone was actually beating the S&P. So CRF made you 50,000 and the SPY made you around 40,000. Now it's showing that SPY didn't even make 38,000. That's because every year you put a new year into this average, this 10-year average, it skews the results from the previous year. So if you leave an important year out, you're going to miss out on huge gains if you're going by Morningstar. Okay, so Cornerstone is moving upward left to right on its chart on Morningstar, but as you can see here on E-Trade, it's moving sideways to down. That's because you have to play Cornerstone properly between its rights offerings. As you can see here, it has a channel of highs and lows, and you can really make a lot of money with these channels if you time them properly. They tell you when to buy and when to sell, so you can easily time this chart, okay, and play it buy the rights offering. If you need more help playing Cornerstone, that's in my Volume 4 e-guide. So when you buy my e-guides, you get free access to Discord for life, and you get my phone number for life, and we alert you of the Cornerstone rights offering here in the Cornerstone discussion section. So we have over 1,000 members here in the Discord chat room pursuing the FIRE lifestyle, and if I can't answer whatever questions you have on your brokerage account, they most likely can. Remember, you can call me anytime, and I love answering phone calls for my clients. I'm always here when you have a question. Ask any of my over 1,000 members who bought my e-guides and have Discord access. You can call me anytime. I love answering your phone calls. This is what I love to do, and you guys are like my extended family when you buy my e-guides, so I leave no man behind. Yieldmax is 50% maintenance at E-Trade. Yieldmax, as you can see here, it is 50% maintenance at E-Trade. So that's why you have to anchor Yieldmax with an index like Cornerstone or SPY or VOO, because Yieldmax is also very volatile. They don't have the entire index within them. So you have to diversify to not only lower your volatility, but to lower your maintenance as well, okay? Again, Yieldmax is 50% maintenance and Cornerstone is 30% maintenance, just like VOO or SPY. But again, VOO or SPY don't pay you qualifying income to level up your account with banks. I use the loans from banks to level up my account once again, and that all is made possible by the dividends that Cornerstone provides. Even if Cornerstone pays your return of capital, which means the dividends are tax-free, it still shows up to banks as income, and you can still get loans off of Cornerstone dividends. So Cornerstone, not only does it give you a 21% dividend, which beats VOO and SPY, but they're tax-free as long as you don't sell, okay? Return of capital, once again, is tax-free as long as you don't sell. And when you have a net asset value that's rising like Cornerstone, okay, Cornerstone bases its NAV off of the S&P. Well, the S&P is always growing. So this means that the return of capital is healthy return of capital and not destructive return of capital. Again, because the underlying that Cornerstone is tied to is the S&P. Most Yieldmax stocks are tied to the indexes like Microsoft and Apple, but there are some Yieldmax stocks that are not very indexed or are not even part of the indexes at all, and that's why you have to be aware of their NAV erosion. But with Cornerstone, it's good return of capital, if you want to use those terms, because even though the stock price looks like it's going sideways to down, again, on Morningstar, the underlying is moving up because the S&P is moving up. You can't say the same for Tesla right now and Tesla with Yieldmax, or with other stocks in Yieldmax that aren't indexed or aren't a large part of the indexes or have their NAVs that are declining. Of course, their charts are going to erode as well, and it's not healthy. But Cornerstone's erosion is healthy because, again, the S&P moves up 7% per year over time. That's what it averages per year. So again, just be aware of the maintenance with Yieldmax. It is 50%. You can go to other brokers that have lower maintenance, like with Robinhood, but they might not have the special drip for Cornerstone. Cornerstone also gives you that 21% dividend, and it drips it down at the NAV for free money every month. So if you own Cornerstone up here at around 8, it's dripping that 21% dividend down at around 7 for free money every month. That's why Cornerstone is so special, and it blows away VOO and SPY for these reasons. Cornerstone gives you 20% premiums per year, it gives you a 21% dividend per year, and it gives you the special drip every month. You just have to time Cornerstone properly, again, between its rights offerings, which is in my Volume 4 e-guide. The second reason why you can't anchor your Yieldmax portfolio with VOO or SPY is because VOO doesn't pay you in a downturn. Either does SPY. Cornerstone pays you during a downturn 20% every month. They never change the dividend until the next year. And by the way, to reset the dividend, you have to play the rights offering properly. So I don't want to hear comments about, well, Cornerstone's stock price is dropping or their dividend has dropped each year. Some years they even raise their dividend, but I don't want to hear that. You have to play the Cornerstone rights offering properly in order to reset your dividend. But Cornerstone pays you during a downturn, VOO doesn't, SPY doesn't, and Cornerstone dollar cost averages for you during the downturn because it drips that special dividend down at the bottom for free money, and it lowers your cost position. So this is how we outperformed in 2022. We used the special drip for Cornerstone. So 2022, if you were buying here around, let's say 10 a share, it was dripping down here at around 750. So it's essentially buying the bottom for you and dollar cost averaging near the lows for you with Cornerstone. So Cornerstone, once again, dollar cost averages for you and buys the lows for you, okay, which is very advantageous for you. Now you don't have to worry about market timing. So if you bought here, once again, around 7, it's dripping down here around 650, and then you get the bottom in the market at the same time. So then we move higher in Cornerstone, and you get, upwards of 20 to 30% premiums per year that Cornerstone averages on top of its 20% dividend. So you don't know where the bottom is with SPY or VOO, but Cornerstone's always dollar cost averaging at the bottom and it tracks the S&P, so it almost almost guarantees that you buy at the bottom with Cornerstone, whereas again with SPY or VOO, you can never guarantee buying the bottom in those funds. The third reason why you can't anchor Yieldmax with VOO or SPY is because VOO won't cash flow you as fast unless there's an extreme bull market. After all, a 20% dividend in Cornerstone times 5 years is 100% payback. So 20% times 5 years, you do the math, that's 100% payback. Once again, the S&P would have to have 20% returns for 5 years to get you that 100% payback. And that's just unlikely with the S&P because the S&P averages 7% per year over time. How can Cornerstone give you 20% premiums each year and a 20% dividend? Again, the answer lies in the rights offering. You have to time it between its rights offerings. And so we'll cash flow much faster with Cornerstone and Yieldmax. Okay, Yieldmax dividends, they're around 40%, as you can see here. So if we own Yieldmax for a little over 3 years, then we're going to cash flow that, and that's much faster than the S&P. The S&P can't really double every 3 years like Yieldmax dividends can because Yieldmax dividends are so much higher, and Yieldmax dividends are sustainable in my opinion because they're priced off of volatility, not earnings. Cornerstone's dividend is sustainable because they offer return of capital back to its shareholders, which is just tax-free if the NAV is growing. So that's how that dividend is sustainable for Cornerstone. Again, they're returning shares to you, but it's good return of capital if the underlying NAV is growing. The rights offering from Cornerstone also cash flows you even quicker than VOO or SPY. So stop running from the RO and embrace it for the opportunity that it is. The RO tells you when to buy and sell, unlike with the S&P. It's hard to rebalance around the highs and lows with the S&P, but Cornerstone tells you when to buy and sell. They telegraph it to you with the rights offering. And once again, we alert you of the rights offering announcement here in Discord. We have an RSS feed hooked up thanks to my admin gains. So we get the rights offering announcement for Cornerstone in Discord, and you don't have to worry about timing that because we alert you in Discord. The fourth reason why you can't anchor VOO or SPY with Yieldmax is VOO is more risky than Cornerstone or even UPRO. Yes, I said it. $90,000 worth of VOO is more risky than $30,000 worth of UPRO. UPRO is a triple leveraged ETF, and VOO is the single ETF. So if you have, again, 30,000 in UPRO, which is the triple leverage S&P ETF, that's like having 90K of VOO. But if VOO pulls back 50% in a given year in a crash, let's just say, VOO will lose you around 45,000. But if you have 30,000 in UPRO, you only lose around 15 to 20,000. So I prefer using UPRO. I put 30K in UPRO instead of 90K in VOO. And then I use the other 60 to 70K that's remaining, and I buy Cornerstone because it's low maintenance and it pays me during the downturn. So also the 70,000 that I put in Cornerstone helps me compound my earnings faster because it's easier to make money with compounding. If I have 100,000 in Cornerstone and I make a 10% return, that's 10,000. If I put 10,000 in a stock, I have to have 100% return to get a $10,000 gain with the stock. So I compound easier with Cornerstone. I put around 400,000 of my dollars in Cornerstone because VOO and SPY are just risky. They don't pay you a dividend during a downturn. They don't help you dollar cost average at the lows. When you're paying your bills and trying to live free out of your account, you can't rely on VOO or SPY. So I go with Cornerstone and UPRO. UPRO, yes, you're going to lose more than SPY or VOO, but if you manage your position size in UPRO, then you lose a lot less in UPRO. Again, 30K of UPRO versus 90K of VOO. I just laid out that example for you. And then I put the rest in Cornerstone for my compounding and dollar cost averaging ability at the lows. Also, Cornerstone gives you the rights offering and the premium. So there's just no reason to not own Cornerstone. And the fifth reason why you can't anchor Yieldmax with VOO or SPY is because Cornerstone and even JEPY can beat the indexes faster if you play them properly in a given year. I doubled in Cornerstone in 2021 alone. So if you go to chart of Cornerstone here in 2021, you'll see that it moved upward left to right from 7 to 15. SPY did not double in 2021. I don't care how bad the market pulled back in 2020. They didn't double again like Cornerstone did. So 2020, as you can see here, I bought around 7 or 8. I didn't even catch it at the bottom. I bought right around here, 7 to 8. And then I took it up to 15. So I got 100% gain in Cornerstone, and I was getting the 20% dividend all the while. I wasn't even dripping Cornerstone at this time because I wasn't aware of the special drip for Cornerstone, and I still was outperforming. So for all of you who asked those questions, if I don't have the special drip, can I still outperform with Cornerstone? Yes, I did in 2021. I got over 100% gain, which again, SPY cannot give you in a given year. So if you need more help doing what I'm doing, email me for my e-guides at akintodd48@gmail.com. When you buy my e-guides, you get free access to the Discord chat room for life, and you get my phone number, so just keep this in mind. Also, if you like my video, click like or subscribe, and I'll talk to you soon, everyone. Thanks.